So what if I could tell you, you could pay off your debt faster and not just pay it off, like not just chug away at it in bits and pieces, but I'm talking about crushing it in record time. Would you be open to listening to what I have to say to you on how you can do that? Of course you would. So let's get into how you can snowball your debt using cash value. Welcome to From 401k to Financial Freedom. I'm Lonzy Green, affectionately known as Mr. Flip Your 401k. I help people build holistic financial strategies using their retirement plan, their cash value life insurance to pay off debt, become investors, get paid for life, and retire comfortably. Welcome to From 401k to Freedom. So hey, look, I know how it is. Okay? You have this debt, right? And you're paying the minimum payments every month, but it only feels like you're scratching the surface, like you're not making any progress, right? That, I don't know, that's just frustrating in its own right. And then you start thinking about how long it's going to take you to pay off the debt. But let's think about some ways in which you can pay it off quicker. And then not only pay it off quicker, not lose any money, right? So we've already talked about how to evaluate your finances so you can find the money that you're missing, the money that's hiding in plain sight. Then we talked about repurposing the money. Now that you found the money, let's repurpose it and put it in a cash value life insurance policy, right? So that money is going to be funding your premium, right? You're building up your cash value. Now that you built up your cash value, what do you want to do? We talked about this. You want to build and borrow from it. So you have a cash value balance in your cash value policy. You want to borrow from it and begin to pay your debt off. Now, what debt should you start with? I think it's really going to be up to you. My recommendation would be to pay off the smallest debt. Some individuals would say to pay off the highest interest debt. And it's possible that your smallest debt can also be your higher interest debt. But for purposes of this conversation, I would say pay off your smaller debt. I like to get moral victories, right? So paying off that smaller debt first. So what you do is that money that you found, you're funding your premium, right, on your cash value. We already talked about this. Now you built up enough cash value. Let's just say your smallest debt is $2,000. Let's say you built up your cash value policy to $3,000. Okay. Now you're going to want to borrow the $2,000 from your cash value policy. And we talked about why you do this. You do this because when you borrow from your cash value, your money still grows as if you never touched it. You take the $2,000, right? You pay off your debt. So now that low balance credit card is paid off. It's gone, finito, out of there, right? What you do is the minimum monthly payment that you were paying on that $2,000 credit card, you take that amount and you pay yourself back into the life insurance. So now what you got is you got the premium that's building up your cash value, but then that minimum monthly payment that you used to make on your credit card is now building up your cash value as well because you're paying yourself back with interest. When you get to a place where you built up your cash value again, you want to rinse and repeat and snowball, right? And what do I mean by that? What is the next highest debt out there for you? You borrow again. That's right. You borrow again from your cash value policy and you pay off your next debt. And you just keep that thing rolling and rolling and rolling and rolling and rolling until you're completely out of debt. And you can use this for any debt. I harp on credit card because it's just such a huge thing, but you can use this for your car loan. You can use this for your mortgage, whatever you want to use it for. The objective is paying off the debt, paying off sooner, and never losing growth on your money while you're paying it off. So how does that sound? If you are interested on what it looks like on how to snowball your debt, or if you need someone to support you, connect with you, guide you on how that strategy looks like, to be able to set up a cash value policy, to be able to build that policy up, its cash value, and then to subsequently borrow from it so that you can pay off your debt and ultimately get out of debt for good, which actually leads to freedom. That is freedom, having money that you can do whatever you want to do with it, travel, you know what I mean, go to events, whatever the case may be, whatever freedom looks like to you, then be sure to click on the link and get more details by getting the book, The Value of Cash Value, right? How corporate employees can get paid for life, become their own bank, and retire comfortably. Or I'm more than welcome to sit down with you and chat one-to-one and talk about a strategy for you to help you get out of debt as well. Either way, I'm here for you. Just let me know, click on the link, and until next time, y'all take care.